Hey traders, and welcome back to the channel. Today, we're diving deep into a fascinating ticker that's just popped up on our advanced scanners, NEPH Inc. This isn't just a generic stock pick, we're going to break down exactly why this small cap healthcare play is signaling potential right now using real numbers and real strategies. Get ready for a unique, highly personalized analysis. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk about NEPH Inc., ticker NEPH. This is a commercial stage company operating in the critical healthcare/medical instruments and supplies sector. They develop and sell vital water filtration solutions primarily for medical applications, specifically in dialysis centers, where clean water for removing biological contaminants is absolutely essential, alongside their commercial applications. This is a small company with a market cap of just $38.02 million, putting it firmly in the penny stock or small cap territory. Looking at recent price action, NEPH has seen some interesting moves. Today, it's up a healthy plus 3.43%, which is a nice bounce. However, over the last 5 days, it's down minus 1.77%, and over the last 30 days, we've seen a minus 4.70% dip. Zooming out, NEPH is currently trading at $3.03,800, which is 45.2% below its 52-week high of $6.4,200. But, on the flip side, it's a solid 32.2% above its 52-week low of $2.06,600. This tells us the stock has pulled back significantly but has also found a floor, hinting at a potential reversal. So, with all that context, why did NEPH flash on our scanners at an entry signal price of $3.03,800? Well, two powerful strategies were triggered. First up, our Turbo FCC, or double bottom hunter strategy. Think of a double bottom as a W shape on the chart, two dips to a similar low, showing that strong buying pressure is preventing further declines after a downtrend. It's a classic bullish reversal pattern. NEPH triggered this because it's shown positive 3-month performance despite recent pullbacks, with its relative strength index, or RSI, currently in the momentum zone, and the underlying average volume trend has been increasing, suggesting growing interest even if individual days are quiet. Second, it hit our harmonic forma synodillary, which means it's a harmonic pattern candidate. Harmonic patterns are precise geometric price patterns that leverage Fibonacci ratios to predict potential reversals or continuations. This strategy identified NEPH as being in a balanced retracement zone. In plain language, this means the price has pulled back to a specific critical Fibonacci level, suggesting it's found a good equilibrium point where sellers are exhausted, and buyers might step back in, supported by a moderate RSI and relative volume. Now, it's one thing for a stock to hit a pattern, but it's another for that signal to be confirmed. Our internal alignment gate uses the VWAP and EMA to filter out false breakouts, giving us higher conviction. Show indicators on chart. Here's what that means for NEPH. 1. The stock's price is trading above its volume-weighted moving average VWAP. This is crucial because it tells us that buying pressure is strong enough to keep the price above where the majority of shares have been traded, indicating bullish sentiment. 2. The trend strength measured by ADX is above 18. ADX tells us if a trend is strong, not necessarily its direction. An ADX above 18 suggests there's a discernible trend in place, reinforcing the validity of the move. 3. And finally, the relative strength index RSI is in the healthy momentum zone, specifically between 45 and 68. This range is ideal. It means the stock isn't overbought or oversold, but rather in a sweet spot for potential continued upward movement. When all three of these conditions align simultaneously, it significantly increases the probability that the signal is real, and not just a fleeting false breakout. Let's talk about the specific levels you'll be looking at with NEPH. The scanner entry signal price is $3.03,800. To protect your capital, the stop loss level is set at $3.0631. This is a tight stop, reflecting the volatility often found in small cap stocks. For taking profits, we have a tiered approach. T-Pone, $3.05,490. TP2, $3.07,180. TP3, $3.08,870. Highlight levels on chart. What's truly exceptional here is the risk/reward ratio of 1:10.0. This means for every single dollar of risk you're taking with that tight stop, you have the potential to make $10 if the trade reaches the higher profit targets. It's a highly favorable setup that prioritizes capital preservation while aiming for substantial gains. Remember, NEPH is under $5, firmly penny or small cap territory, which can mean higher volatility but also higher potential returns for those who understand and manage the risks. Just a quick reminder before we continue. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Looking at the volume, today's volume for NEPH is 1860 shares. This is significantly lower than its 30-day average volume of 13,902 shares. The relative volume is currently at a low 0.1x above average. Zoom in on volume BAR. While low volume might sometimes seem concerning in the context of a double bottom or harmonic pattern, it can actually suggest quiet accumulation or consolidation after a pullback before a potential breakout. What we'd want to see for confirmation of a move upward is a sustained increase in volume as the price climbs. Keep an eye on any news related to the healthcare sector, specifically medical instruments, water filtration, or developments from MEPHs regarding their dialysis solutions. These could act as significant catalysts. So, NEPH Inc. presents a compelling case study right now. We have a small cap healthcare company critical in its niche, showing technical signals of a potential reversal. The double bottom and harmonic patterns, confirmed by a robust VWAP and EMA alignment gate, suggest this stock is in a prime position for a move. Add to that the impressive 1:10.0 risk/reward ratio, and you have a setup worth observing closely. Remember, it's about executing your plan, managing your risk, and being disciplined. If you found this deep dive valuable, do me a favor, like this video, subscribe to the channel for more unique stock analyses, and drop your questions about NEPH or any other stocks in the comments below. We love hearing from you. Until next time, happy trading.